Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, what do we got going on? Remember, we made that 5,000 print on the S&P. 5,000 record high, right? Never been higher. The shorts, they were throwing in the towel. Everybody was getting on board. Everybody was ready for the moon ride. What happened? What happened? Got a little bit of a rug pull. Not big yet, but maybe it amounts into something bigger. We'll see how it plays out, but that's so common. Gravitated to the 5,000 so they could get the record high, get that number 5,000. And now it's kind of like a sell the news event. They're selling this market off. It's just starting, but it could amount to something bigger. Is it going to happen? We'll see. We'll see. We'll see if we can get below the 20-day moving average and stay there. You look at the HYG, it's telling us that we're going lower. We're going to start to head down. You see, the rug pull is starting to happen. Once again, they pushed it up, pushed it up, pushed it up to 5,000, and then we're pulling out the rug. Now, everybody says, but Mike, it's an election year. They'll prop this market up. And I say they're going to try. They're going to try. Absolutely. Absolutely going to try. They're going to print trillions of dollars. But here's the problem. Here's the problem. What really happened, right? Well, the inflation news came out. The inflation is not going away. The inflation's a problem. Now, here's the thing. Here's the thing. Okay, so they've raised rates from 0% up to 5.25, right? But inflation is still running hotter than that. Now, they'll tell you that inflation's at 4%. But if they measure it the way they did back in the 1980s, it's running around 7 or 8%. And you can't fight 7 or 8% inflation with the 5% Fed funds rate. They would have to get above the rate of inflation, but that's never going to happen. Why? Well, the Fed can't do that. You see, what we got is the banking crisis. We got New York Community Bank. They're starting to go down. Jerome Powell. Now, this is really strange, really strange. You got to pick up on this. Now, a federal chairman, Jerome Powell, comes out and says, yes, banks are going to fail. The FDIC, they have a list of 100 banks they know that are in trouble. They're releasing this information to the public. Now, of course, they're not going to tell us what the 100 banks are that are in trouble because everybody would do a bank run. They'd go take their money out. But we know that the banks are going to dominoes over, right? And the Fed, they're going to have to lower rates, not raise rates. But they got inflation. They can't lower rates and they can't raise rates. It's a checkmate. They have nothing. They got nothing they can do. They can print money. They're going to print money, but what does that cause? Causes more inflation. You see, they cannot fight inflation. They're waving the white flag. Inflation wins. Inflation wins. And the stock market's starting to realize this. Well, let me think. Inflation's going to win. What's that going to do to rate cuts? Well, they thought they were going to cut in February. They didn't cut in February. They thought, well, the next one will be in March. They've taken that off the table. Well, then they're going to cut in May. No, they're not. Then they're going to cut in June. No, they're not. They're already out to July. And it may not cut this year. That'd be wild. Now, I do believe they're going to cut this year, but the market was hoping for 6 rate cuts. It's realized that's not going to happen anymore. So now the market's starting to go down, The Moon Boys, they didn't think this market could go down. They only thought the market could go up, but this market is starting to go down. You see, we're in trouble right now. We're in trouble. We're at a checkmate. Inflation is not done. Inflation's going to come roaring back higher. It's going to go higher. It'll probably surpass that 9% rate. People think that's going to come right back down to 2%. People think the Fed's going to lower rates down to 0%. No. It's not going to happen. Inflation is not dead. Inflation is still going up. Prices are still going up. It's terrible. The Fed, they can't do anything. I feel sorry for them. Look, they got a banking crisis going on right now, a financial crisis going on right now, and they can't do a thing about it. They'd like to lower rates to help out the banks, but they can't. Inflation. They're looking like idiots right now. There's nothing they can do. we're at a checkmate. Let's see which way it plays out. Now, here's one thing I do know. What are they good at? They're good at printing money. They're going to print and print and print. They're going to have to let inflation run hot. They might even hyperinflate. They don't have a choice. What are they going to do? What are they going to do? They're going to raise rates to 10%? They cannot. The banking system would collapse. The whole financial system would go down. And that's what is a little fearful right now. They're trying to keep the financial system propped up when the system itself has shown cracks. There's cracks in the system, and the system may end up going down completely. Now, that would be bad. Then you'd get some prices going down, right? You get the banking crisis going where you have a liquidity crisis. You're going to see all assets going down. Commercial real estate already broken, already gone down. Bonds, oh, those are not looking good either. We got everything, houses. You get a liquidity crisis, you got a problem. Now, right now, it's very interesting. I'm a real estate broker. Most of you know that. But what I got right now is everybody's really nervous, right? They're really nervous. We got the sellers. The sellers are going, oh, crap, maybe I should have sold. Maybe I should have sold when Billy Bob got out. Oh, no, can I still get the price Billy Bob got? Well, not quite. You'll be close to it, but not quite. Now they're really nervous because they want to put that house on the market. They want to get that on the market fast, so they're nervous. But here's the buyers. I got one right now. I'm in the middle of a transaction. The buyer's thinking, well, maybe I don't want to pay $2.5–3 million for a house. That's a lot of money. 2.5 to 3 million range. That's a lot of money. Do they want to pay that? Look, they have good jobs. They work at Apple. They work at Facebook. Okay, those are good jobs. Will they have that job for 30 years? They're going to have a 30-year mortgage on this. You know who else is nervous right now? The banks. The banks are nervous. The banks aren't sure they want to make the loan now. Look they're putting half down, $1.5 million, putting it down. And the bank's going, well, I don't know, let me check on your credit rating again. Credit rating's over 800. The banks are slow playing it. They're not sure they want to make the loan because they don't know when the crash is going to happen. They're pretty sure it's going to come. Look they're loaning 50% loan to value. House worth $3 million. The bank comes in with $1.5 million. They come in with $1.5 billion. And the bank is still nervous. I'm telling you, there's a banking problem, a banking crisis. This is not going to end well. It's terrible. And you got the real estate brokers. They're all nervous. We're always nervous. We never know exactly what's going on, but you got bailouts coming, and it's going to get ugly. The bailouts, everybody needs a bailout, right? The states are going to need a bailout. Look the states are underwater. Just the retirement benefit programs in the states are, California, $140 billion underfunded. Texas, $120 billion. We got New York, $130 billion. Who's going to bail them out? Who's going to bail your pension out? Right? So the pensions are going to need bailing out. The states, they're broke. They don't have money. Who's going to bail the states out? The states got to be bailed out. But the Fed, they're already $35 trillion in debt. They got $100 trillion in unfunded liabilities. There's no money, but yet we got money to send Ukraine. Just passed through the Senate, right? What is it? Another $100 billion? No problem there. We don't have money to fund our own government. We can send it around the world. People tell me that's a good thing. We should help Ukraine. Maybe we should. Maybe we shouldn't. I'd feel much better about it if we had the money to help them with, but we don't have the money. So what are they going to do? We're going to print. We're going to print. We're going to print. Now we're going to keep printing. We're going to print until infinity and beyond. Look by the end of the year, I predict we'll be at $40 trillion in debt. Multiply that out by 5%, $2 trillion. $2 trillion of our tax money, which is basically half. We take in about $4 trillion a year in taxes. Half of that's going to be going just to pay the interest on our debt. And here's the thing. Okay, so if the stock market, what if the stock market comes in? What if it comes in 30, 40, 50%? What if it does worse than that, 60, 70, 80%? What happens to tax? tax revenues, they drop, they drop, they drop. But what happens to interest payments as the rates keep staying high and going higher? They go up, 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 up. I'm telling you, so what we print more money, but that's more interest. There is no way out. We're at a checkmate. Look at the system is going to go down. Now, houses are going to go down with it, but a lot of people go, not in my area. My area, we're going to the moon. We got the moon boys. We're going to push this up. And look at, I'm just telling my clients, I got a couple transactions going right now. I want to get them closed up as quickly as possible because this could blow at any time. Now, a lot of people think we have more time. It's an election year, and I hope we have more time. Now, look at, I don't think we have years left. 3 years? No, I don't think so. Some people say we still have 5 years before we have to reset the system. I see no way that this will go on 5 more years. 3 years? Don't think it's going to go that far. Somewhere between here and 3 years, but it could be next week. That's why I want to get these deals closed up for my clients so they can make it out, so they can go hang out with Billy Bob. You want to get out. You want your transaction to fund. You want it to fund while the banks still have some money. Look at, they're nervous. They don't want to make loans anymore. They do not want to make loans. The banks are not making loans. You can go in with the 800 credit scores, and they're still going to be throwing all kinds of questions at you. They're going to want you 50% down, and they're still going to be playing it slow. They don't trust anything right now, and for good reason. They learned from 2008, right? They were the bag holders. And guess what? They get to be the bag holders again. You got commercial real estate. Who's the bag holders? The regional banks. They own about 30% of it on their books. 30% are owned on their books. The big banks only about 10 to 15%. They're about half the exposure of the regionals. The regionals are going to topple over like dominoes, really. And it's pretty sad. This is not a good thing. I know I come out here and I joke about this stuff, but it's actually starting to get a little bit scary. I'm telling you, look, this does not end well. There's going to be inflation. Poor people are not going to be able to afford food. It's just not a good thing right now. We're at that checkmate where everybody needs bailing out, but the system, well, it's too big to bail out. You can print 100 trillion, but it's not really a bailout because we got to pay that money back, right? So you're just increasing the debt, and then we're just printing money, and no country's ever printed their way to prosperity. It's not possible to do. But everybody needs a bailout. The system needs a bailout. The system's on its last legs. I mean, this is the last legs. When the Fed started in 1913, a dollar was worth a dollar. Now that dollar is worth about 2 cents, and this is the last 2 cents. Once they disappear, the system goes away, and somehow a new system will rise up. Now, a lot of people say, oh, that's going to be Bitcoin. I don't think so. I don't think so. Maybe you're right. But no, it ain't going to be Bitcoin. We'll see how it plays out. But there will be a new system coming into play. The dollar will completely become worthless. You'll have a lot of dollars. You'll probably get a raise on your job. Maybe the stock market, we can pump it up again. 5,000 on the S&P, pump it up to 10,000. Maybe we can hyperinflate. In Zimbabwe, you could be a trillionaire, right? $1 trillion. Doesn't buy you much. Doesn't even buy you a gallon of milk anymore. Look, hyperinflation is the worst thing that ever can happen to a country. And we have not taken hyperinflation off the table because of what they're doing, because of how the leaders run our country, because of the Federal Reserve. We got to get rid of the Fed when we rebuild. We're going to have to rebuild. Look at this system's going down. Next 3 to 5 years, this system, you won't recognize this country. And it's not going to be in a good way. I'm telling you, system's going down. We have a big problem. When we rebuild, there's going to be opportunities. Don't get me wrong. There's going to be opportunities. What's opportunities, Mike? Well, I think if you have real money like gold and silver, I think you'll do all right. I think you'll be able to pick up the average price home for about 500 ounces of silver. Back in the 30s in Germany, you could buy a whole city block, 25 ounces of gold. You could buy a whole city block. Now, will that happen again? I have no idea. I just think I feel a little more safe with real money than the fiat money because I know the fiat money is going to go to zero. And unfortunately, Bitcoin is still a fiat system. It's not backed by anything, right? Backed by some digits on the screen. I don't think that's the answer. A lot of people think it's the answer. I'll get a lot of hate comments, and that's okay. Maybe it is the answer for them. But we need a bailout right now, and everybody needs a bailout. Look at the states. They need a bailout. The pensions, they need a bailout. The whole banking system needs a bailout. The cities need a bailout. Everything is based on debt, and we don't have the money to repay the debt back. The only thing we got money for is to pay for war. War is a good thing, right? Everybody loves war. Why? Because it makes the stock market go up. War is very positive for the stock market. There's going to be more wars. I wouldn't be surprised if we started World War III already. Kind of scary, right? I mean, we say we're not at war. We just like to bomb people. That's what we do. We're good at bombing people and then saying we're not at war. Well, what is bombing people? I think that's at war. That's just my take. I could be wrong. Maybe that's just what we do nowadays. But this whole thing is not going to end well, and it's coming to a head. We're at a checkmate with the Federal Reserve. They can't raise rates. They can't lower them. They're stuck. They're stuck, and they're going to be stuck for a long time. Anyways, I know this was a little bit negative today, but what's going on in the world? Hey, if you like it, though, give me the thumbs up. If you really like it, punch the subscribe button. Get out there, everybody. Enjoy your day. Bye-bye now.